All right, guys, welcome. So like I said, I had like three trades this week. All of them kind of hit my initial target, and then from there they all just kind of went right back. We can start pretty much from top down. I don't know if you guys saw my post earlier this week how I was looking for this continuation sell, and then AU I had a really good setup that I really liked, but then that one ended up being wrong in the long run. And I think last one was like NU. Yeah, it's just here. So I'll go ahead and go through each of these individually. I think AU was the best scenario in terms of quality, but when we talk about the actual, I guess like run itself, I think my NU trade was the best. But let's just go ahead and go with EU first. So if you guys remember last week, I mean, it's been a couple of weeks now, right? Like I've been pretty much setting my argument as to why we could potentially see an accumulation schematic in terms of the weekly. It's blurry on your side. Is it blurry on everybody's side? Yo, is this blurry? Blurry, really? Um, Still the same? Oh, okay. I guess it was just a glitch. It was a glitch in, I guess. It could have been a Zoom glitch. No, it's good. My bad, my bad. I think that's just a Zoom glitch. But don't worry, the recording itself is I'm not doing the cloud recordings like I was doing before. It was killing the quality. But let's go ahead and continue here. So you guys know how I've been pleading my case, right, with dollar, with the potential upbringing, I guess you could say, of an accumulation schematic when we were talking about where is my tools here? Right, how we were seeing potentially, right, some type of accumulation schematic start to occur. And then with the failure of the internal swing, this internal break, right, could signify potentially a test, but obviously that could then change next week. And how can that change next week? It's like, let's say, just based on where we are today, um, if we were to come back into here and we are to react and break something, then we could obviously start to see some lower movement. Why? Because if we are to have this reaction and then have, let's say, a significant break, then we can also align this level of structure with high low retracement continuation, right? And the only thing that would combat that is the fact that we could be seeing, right, a schematic on a larger scheme. And this case, you guys know I've been talking about this for a couple of weeks now. Um, but it kind of sucks because now that we're range bound again from a overall POV, right? The movements just have been kind of choppy, especially this week because we're seeing a lot of uncertainty here. So if we're seeing a lot of uncertainty here, we can clearly see that being printed across the board, right? From EU with a slow move down. Go to H1 for a better view. Right, we just see so much choppiness. And you guys know the beginning of the week here was like very, So let me see. All right. Anyways, right. So we like I said, we saw this pretty much the first at the beginning of the week across the board from anything USD. Very fucking boring, if I'm being honest. Very boring. Um, this one not so much, but I didn't really look at this one. And let's see, which UJ. This one was the worst one out of the bunch. So I didn't really trade this one. What is that sound? Hold on, guys. Hope you guys can't hear that. All right, my bad. Um, anyways, right, back to my EU position. So EU position, right, was the continuation internally here, as we can see. So in terms of what I was looking at from a bias POV is after we had left a right after we had left the ranging market side, then obviously we're now coming into a previously swept zone. So the sweep here, excuse me, right? We had an internal sweep, right? Therefore, you guys know with an internal sweep, I don't like to take immediate continuations because if I take an immediate continuation, it will more than likely fail, right? If we take liquidity on one side and then we want to continue in that direction, then I need, right, the external liquidity or any type of liquidity in the opposite direction to then justify this going lower, right? And if that is to not occur, then I cannot really justify the continuation to the downside, right? So based on this internal break, right, based on the internal CBOS, right, my assumption as to why we would continue lower is to be any type of failed reaction to the any failed upside reaction. So therefore, any failed upside reaction, if we are to then look at this from the internal POV, then you guys can see here external CBOS, internal still bullish, right? But then the internal did have a structural disruption. Not to mention, we can argue this to be OFD as well. So if we have OFD, the failure of a POI, and we have SD, which is structural disruption, then right, then from there we can start to see signs that we could potentially go lower. But that wasn't enough for me. So as you guys know, this even though we technically had structural disruption here, right, we are still technically within the internal bullish range, which you can see here. So if we're still within the bullish range here, then it makes all the sense for this to continue higher. But as you guys know, I really like my engulfing. So once I saw an engulfing, that pretty much see took up just about what about 6-7 candles, right? As you can see here. So an engulfing that took up 6-7-8 candles. This kind of just shows a lot of intention for me because you guys know that engulfings are pretty much implied momentum, and that momentum is presented internally, which you can see here, right? Implied momentum, external engulfing, and that from there is then my reason to want to execute based on the inefficiency fill, right? And that inefficiency fill, I believe, is on M3, M5. Oh yeah, right here, right? So little inefficiency fill, right? I could have waited for the M3, which could have been there, but you guys know that I'm trying to get away from the habit of wanting to get the perfect entry, and I just want to make sure that I get in the trade and that the invalidation is correct. My invalidation was a bit high. I could have actually put it here. I could have either put it here or I could have put it here, right? If I put it here, then that means that the only reason why this would lose is if we were to have OFD in the opposite direction, which would have been here, right? So therefore, this high led into the slow, and then that's the high that led into the slow. So if we are to have the break of the zone, that we can imply OFD, and therefore this is going to go higher, right? And then if this goes higher, then creates another sweep, right? Then we could potentially enter again, but that's an assumption, and I cannot assume that to happen. So therefore, that's why my invalidation has to be either here or here, right? Aggressive, conservative. So, right, CBOS, we tap previous structure, and then we had the internal OFDSD, right? From there, TP1 was hit, which was the low here. And I actually held this a bit longer. I was wanting to see how deep we could go, because if you guys watched my review, you guys know that this overall zone is what we were looking at, right? To see potentially any kind of reaction, and ended up going further. But because we were coming into this POI, this was actually my second take profit. And so once we hit that take profit, once we hit that, this overall sell to buy, then from the sell to buy, I'm then looking at the refined sell to buy. And then this was actually going to be my last target, but then it ended up kind of just trailing back, right? So overall, I wouldn't recommend this type of scenario. Like I don't like the scenario because one, I feel like I'm very low in price. For example, where even though we have a sweep and we have an internal reaction, this should be majority target here. And then obviously trailing it is a bit lower, but we're overall within, right, a discount of this range, and this range is not even solidified yet, right? Just because of this internal break that just solidifies level 2, right? But technically, we are still within this overall range that has not been solidified yet, and it's only until, right, my invalidation is hit that we now have a solidified here or solidified range here. So it's only from there that we can justify, right, a actual intraday move to the downside, right? So the scalp is reasonable, but there is a lot of risk with trying to pursue these. I'll call them late trades. Let's just say late trades. All right, does that make sense? Any questions here? No questions? Oop, shit. All right, no questions. No questions. Anyways, on to the next EU. I actually really like this scenario this week. My position was here. I hope you guys can't hear that. Can you guys hear that sound? Um, I don't know why it does that. Yeah, my bad. Let me hold on. I'll just remove the share sound. That's just some of my coding projects working out. My bad. All right, you guys shouldn't be able to hear it anymore. Anyways, second scenario was my AU trade. Let me just go ahead and start here. So this one is a bit more of a complex scenario in terms of the levels of structure that are involved, because clearly we are bullish on an external sense if we're talking about, let's say, a major intraday, right? If we're here on H1 and we have a bullish move to the upside, then realistically we should be looking for a continuation, right? Yes and no. It just depends on the scale of trade that you're looking for. Right? If you're an intraday trader, then sure, you can look for maybe an internal leg to get you up there, but because we're on the H1 time frame, this is more than likely going to be some type of swing. So if we're looking at this to be some type of swing, right, then I would need for actually let's just say if I was to look for the swing, then I would realistically want to see some type of lower pricing, right, to overall get a discount of low to high, and then obviously look for the transition from the minor intraday to then want to get this to the upside, right? So that would be the only scenario where I would look for a bullish swing on these time frames. What does that mean for if I'm trading the M5? Well, realistically, if I'm trading the M5, then I'm still within a premium region of the range. So if I'm within a premium region of the range, then I'm looking for internal reactions. And more than anything, I'm either going to trade an internal reversal if it's appropriate, or right, I'm going to trade the continuation after the the scalp continuation after the minor intraday transition from bearish to bullish, right? So where does my scenario come from here? Well, clearly we're sweeping a previous major high. This previous major high is a bit extended, so I'm not going to consider this a sweep. It actually breaches the threshold for that. So because it breaches the threshold for that, cannot continue. I cannot confirm this to be some type of reversal sweep. But if the internal order flow is to be bearish, then I can at least try to assume that I can take a continuation bearish to the downside, or a bearish continuation to the downside, right? So if we sweep an external high, right, and then we obviously have a break of structure here. Why is this break of structure important? Because very clearly you can see this is the last low that led into a high, right? So this is the final low that led into the last high. And then because of that, once this breaks, then therefore we are now technically bearish from the minor intraday sense, right? So if we're bearish from the minor intraday sense, then now we can assume any type of scalp continuation to the downside if the timing is there, right? So we clearly see potential CBOS here. What does that do? That solidifies high into low, pullback, continuation, right? So then from here, all right, this is a bit of a complex scenario here. And I'm going to keep saying that because there's a lot of things in my favor and there's a lot of things outside of my favor, which is why it would also cause a lot of doubt and not necessarily a high conviction scenario. We have equal lows that have been swept, right? Equal lows have been swept. We have high momentum internally to the upside. What does that mean? That means that we are potentially reacting from this. So if we are potentially reacting from this, then I can assume a bullish scenario, right? So that means that if I'm zooming in, right, and we sweep those equal lows and we tap the POI, and then the POI now leads to this internal minor break of structure or minor intraday break of structure, that signifies to me that the POI is valid and that we can continue, or that we can assume a potential move to the upside, right? And just because of that, then, right, I'm obviously looking at a sell to buy that led to this break of structure, right? So that sell to buy that led to the break of structure, right, is obviously a future reference point, a future point of interest. So that point of interest, you could then see we had the same thing happen here, where we had, right, a low, right, be swept, and then the final high that led into a low is now broken, right? Because up until then, it's high, low, high, low. And then after that, right, this is, you could consider as a CBOS, but we did not break this low. So the last time that we broke this low was from this high into this low. So that is broken, right? That is broken. That confirms this to be an internal sweep. And I can consider this a bullish transition. So this scenario is valid to be bullish as of right now, right? So therefore, that bullish scenario is technically valid. Doesn't matter where you enter. Let's just say you enter, like, let's say you use the entire POI or something like that, and then you're obviously aiming for TP1 at the high, right? That could be a valid bullish scenario, but it's not my scenario for one, because I'm not really looking at the charts at this time. But what led into the framing of my trade, which is here, right, is the reaction of that. So if I'm seeing this as a bullish scenario, then clearly this scenario is bullish. So now what would be the invalidation of this scenario? That would be the break of here. Why the break of here? Because if you're to break the POI after it's been reacted from, then this is OFD, right? Order flow disruption. So if we have order flow disruption, then I can assume, right, that the internal range is what will continue lower, right? Because that's the whole point of the OFD. It's a failed POI. So if it's a failed POI, then I'm trading against the POI into the next direction, right? So just judging off that, my scenario then came from, obviously we have the OFD here present, right? And it's not ready yet. It's not ready after here. Why? Because the devil's advocate to then the OFD scenario is that, okay, you guys know that I tell you guys that we can have a position at the open, a position at the 50%, or we have a reaction from the sweep of the POI, which are all valid to an extent under certain contexts. So because we're potentially sweeping here and then the internal is bullish, then if the internal is bullish, then I'm also looking at the final low that goes into a high, right? So obviously, as of now, this is a solidified low, but we have an internal sweep here. So once we have this internal sweep and then we have the break of structure here, then we have to think about what that means. Because look, I'm telling you guys a bunch of things right now, but the most important things to note on these scenarios are, one, the external M15 POI that led us into sweeping these equal lows. That's one. Two, this break of structure, which causes the POI to be valid, and that we have a potential area to be bullish. Two. And then three is obviously the fact that we have an internal transition here within the POI that led to the completion of two. This is three. So if we are looking at these three components, that generates a bullish scenario. But then four would be the invalidation of the bullish scenario, which is obviously causing us to be bearish, right? And 5 is to now understand that the transition here, right? This low that led into a high, that is broken. So therefore that is broken. So this is validating the range that is here because that is considered LGC, right? LGC based on that. So an LG to the downside, right? That is validating this, which is validating the OFD here, right? Which is validating a potential continuation of this range, right? So I can go both ways, but it's only until I have that internal transition that I can justify this being valid, which justifies this being valid, which justifies this being valid, which justifies this being valid. It's a trickling effect, right? And so therefore, because of that internal LG, like I stated, my position was here, right? And why is my invalidation here, not at the high? Simply put, hold it. Oh, excuse me. Simply put, if we are to break this low, confirm that to be an LG, which is a potential LGC. Therefore, if we are to break this high, then we can, if we were to break this high, let's say here, then that is now a bullish LGC, which would validate sweeping this previous POI, which would be the third possible scenario at a POI, right? And then that would validate me to want to be bullish, right? So do you guys understand what I'm trying to say here with each scenario, right? My bearish scenario is validated up until the end, but then if I was to be bullish or if I was to want to be bullish, then I would need to wait for that to be invalidated. Does that idea make sense? Cool. And that's why we primarily want to trade scenarios that fail. I don't want to trade a continuation of a trend. I want to trade a failure of a reversal because that would be considered a continuation, right? We don't want to trade the continuation of a POI. We would want to trade a failed POI because that is probably a continuation on a different note, right? And that's why these are just a little bit more consistent in my eyes, because you guys can very clearly see that a continuation here could have given a reaction, but it failed. But it's like it's more consistent to want to trade with the invalidation of a scenario than it is to try to trade the continuation, because these could provide a reward if you were to add more delicacies. Like let's say you add more complexity to the model. Like okay, I will only trade a continuation if it's this type of if it's like minor intraday, major intraday is aligned, and my scalp is then transitioning from bearish to bullish, so I can then be bullish, right? Like we can add those types of intricacies, but I don't see it as that simple. Like I said, the LGC itself, the LGC model is a continuation model, but although it's a continuation model, it requires something to fail. And I just think that mindset is a bit easier to interpret and a bit easier to apply. Yo, come on. What? Mute your mics, guys. Mute your mics. All right. Anyways, right from here, my TP1 is here, and then obviously my full target is here. This is what I'm looking for. And it sucks because I actually ended up hitting break even here. Such a good scenario, and ended up not going in my favor, but that's okay because the entry itself is justified, because it's until we see this, right? That is what invalidates my scenario, right? Or at least the timing of my scenario. That doesn't necessarily invalidate my direction, but it invalidates the timing of my scenario. So if we have this, then this is now telling me that we are potentially not going to see this right now. That's why you need then to have a sweep. And then after the sweep, then from there, you can see that there's another clearly bigger move, right? So was I technically right? I was right in execution. Was I right in management? Obviously not. But at the time, I could still consider this to be valid bearish, because we can obviously argue that if we're to continue to this low, then we would need to potentially see this at the most to then continue lower. Because what you need to understand is like even if we break this and then we still continue lower, at the point of breaking this, we are technically bullish, and it requires then another transition internally to consider it bearish again, right? So that's that. Um, I consider this a trade a lot better just because the 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 reasoning for the entry is a bit better with than EU was. Um, although EU was a better result. I just like how this is an actual failed scenario, whereas EU doesn't feel like a failed scenario, right? And it feels like a little bit more forced here, if that makes sense. But last one, this one was a very traditional OG trade. Literally a simple Fibonacci trade to the downside here, with obviously my immediate. So I was looking at a internal just turbulence point. From the turbulence point, I'm looking at a continuation to the downside. And now, why am I even bothering with a potential Fibonacci trade? Why am I not waiting for a model? All right. Well, think about it like this as well. And the only reason why I was very confident in this to continue lower is the fact that we are obviously externally bullish. Right? We technically have a pullback. The pullback is solidified here, right? But as soon as we sweep this high, right? We then see immediate breaks of structure. Therefore, we have a potential reversal sweep in play. So if you have a reversal sweep in play, then that would be validated here. So therefore, we have a bearish range, right? And then we have another bearish range, right? So there's level one, level one. Level two would be this sweep, and then this is what's causing us to go lower. So if we have one level of structure, then we have a sweep, right? And then that continues lower, right? Then I'm looking at the LGC. LGC, 71 fib, take this to the low and complete the sweep. That's why I'm seeing it as a simple continuation scenario. Do I think we'll still reach there? Maybe. Um, maybe not. What would need to happen for us to reach that? Let's just say if we're looking at this now, right, then clearly we had a bullish transition. That bullish transition led us to the upside. But now, based on that scenario, right, if let's just say if we are to break this with some type of momentum, then it validates the POI. And if it validates the POI and we break this PO at this level here, then I can assume us to want to continue lower into my original target. So yes, probably could still reach that. Yeah, probably still could reach that. Today, I don't know if it would be today, but let's actually see this. It's really hard to fight this one on being bullish right now. But the reason why I'm fighting this on being bearish right now, I mean on being on this being bullish right now, is the fact that we did not break this low, so this looks like it could continue higher, even though we're slowing down. Um, but yeah, I'm very interested to see how we react with DXY next week. The next probably 2-3 days next week are going to be very important because either we're going to come in and react from the POI and then maybe go lower, or we could see a sweep of Thursday, Friday low, and then have a bullish reaction here. And then this would actually favor the accumulation sweep and test. All right. So that'll pretty much be it for me today. Any questions, concerns? What are you guys looking at? Any case studies for today? Let me open up the Discord really quick. right? Let's see. Nice. 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 Very nice. I like when these POIs are very clear. You guys can very clearly see. Oh shit. Very clearly see. Sell to buy. Really like these. Case study is cool. Let's see. A lot of charts. All right, cool. Anyways, okay, so clearly a sweep, right? Clear sweep. The only problem is that we're probably still within a discount. So the stop loss can be technically hit and you can still have a bearish a trade play out in your favor in efficiency here, but this is technically the entire buy to sell to buy, I mean buy to sell, sorry. So just due to that alone, maybe the reaction from the open of that can be the catalyst here, but I do like how there's also an engulfing there. Excuse me. Yeah, I see. And then you're also trading this really low. So, excuse me. We're already extended here. We're already extended here. And you're potentially at a potential sweep area. So, like, I don't know if this is ideal in terms of placement. Yes, there's a potential sweep, but from the overall sense, you're also very extended. Okay. I see the idea. I see the idea. You're bearish, pull back, and you're expecting this to complete. So then you're taking a sweep. I don't not like the trade. I don't not like the trade now. But yeah, see. So now here, it's like once we see this now, this is where I would want to see a transition to want to go lower. This is where. Why? Because we're within the premium, right? We have an internal sweep here, which means that internal sweep causes us to be internally bullish. So if we're internally bullish, then I need to see some type of either bearish failure to go higher, right? I wouldn't just want to take let's just say this. I wouldn't want to take that. Okay, see, this is much better. You see? So you're technically bearish. Well, we could argue on this time frame that we're technically bearish, right? But you're looking at the transition from bearish to bullish, right? And we're taking that when we have already seen some type of bearish movement. Okay, better because we're also seeing a transition here. We have a bullish range. So if you have a bullish range, then therefore you're looking at a transition, right? So very good. This is good. I like this. I like this. Excuse me. I like this more as well now because you're seeing an overall shift from bearish to bullish. So if we're seeing this, if we're trying to see a conversion to bullishness here, then you have this break of structure important. But I think the combination of this and this validates us to want to be bullish. But then obviously the internal ranges have to fit. So then you have the internal range, then you have a sweep. This is a very good trade, bro. This is a very good trade. Even if this is a fail, I think this is a very good trade. Because he's catching the external transition plus the internal. transition. This is very good from a fractal POV. Like this is good practice. Very nice, bro. This is great. This is a great trade. I want you guys to note this because even if you may not trade from the like using the same exact concepts that he's using, because maybe this is not how I would use them, the idea is there. And I think the idea being there is more important than the concept that you actually use. So like, let me ask you guys a question. I've answered this a lot before. Like, what do you guys think is the basis of my entire style? Outside of solidified points. Solidified points is obviously like the root, but like solidified points are the mechanism that we use to read a market, right? And then obviously correlating levels. But like, what would you say that my style entirely falls down to? Let's say our. I'll say our style, right? Who can answer that for me? I'm gonna give you guys 2 minutes. Let me go get something real quick. Failure of a scenario. What do you call that? What do you call a failure of a scenario? What are my roots, guys? Do you guys remember what my roots are? What was the first school of thought that I ever learned? Yep, transitions. Perfect. Everything is a transition. What the fuck? What the fuck? um, everything is a transition, right? The mechanism that we use to read a transition, whether from bearish to bullish or bullish to bullish or bullish to bearish or bearish to bearish, is solidified points. Because a solidified point will show you where a structural range is, and then the relationships of the structural ranges are what give you a bias. Therefore, the transitions from a bullish structural range through a bearish structural range with the internal structural ranges are the transition itself. Right? That's like the gist of everything. It's like transitions. And why do transitions matter? Because I would hate, like, for example, the let me look at this again. The most annoying thing that I ever like experienced like coming up was seeing a trend and then me trying to trade this and then it failed. Right? Why? Because realistically, like once the trend is established, it might be a bit late to enter. A lot of the time, especially in trending markets like FX. Maybe like in future, maybe like in commodities, metals, maybe a little bit different because those are kind of like overall bullish, over like just overall in general. But when we're trading FX, we're looking at a lot of upwards movement, a lot of downwards movement, a lot more. I don't say volatility, but just a whole lot more. Let's just say a lot of trends, right? So if we're seeing a lot of trends, then if we're seeing a lot of trends by default, then it makes sense to want to trade the transitions between the trends from bearish to bullish. So therefore, rather than trying to trade this and have it fail, trade the transition itself, because we know that this is where the bearish move begins. And so even if this brings us to an overall retracement and then it goes up, that's more than enough time to either take a partial or take a break even, or you know what I mean, something like that. And there's always the possibility that you can see this go lower. So the reason why I really like this trade is because, one, you have the overall transition, and then you have the internal transition. Because it's when these things align, it's when they align on a bigger scope, that this is how you can achieve a very high, quote unquote, risk to reward trade with a high conviction scenario. So this you can easily hold to, like, let's say if there's like a high here, and then now you have like a 1 to 20, 1 to etc. Right? Obviously, you're gonna take transition, you're gonna take partials down the way, but you need to be more conscious that this is a position where this buy, if this buy is to then lead us to break this level of structure, then that confirms the overall transition from bearish to bullish. Therefore, I can hold this longer. So I don't know, maybe this one actually did go a little bit higher, maybe not. Wait, the news is not. This is the 18th. This is 2 days ago. Here, right? This is here. See what I mean? So like, so you're catching. This is an external overall trend, an external overall bullish, right? But this is one level in and of itself. However, the internal level here, right? That transitions here as unwillingness, right? Structural disruption. So then you could assume that based on this being structural disruption, then you're aiming for this low. But it's the transition here, right? Once you break that, which is what you're showing, which is what I'm explaining here. Shit. Which is what I'm explaining here, right? Once you have this and then this, which in my chart is this and then this, right? Unless I'm mistaken, I'm pretty sure that's where it is. This transition is showing to me that the the structural disruption here that should be aiming for this low is now unwillingness, and we now have a transition to the upside. Therefore, if I'm looking at this now from the internal sense, like here, I don't know if that's swept or not. Maybe it's swept. I don't know. Anyways, if it did, if it swept, that's actually even better. But if it didn't, then that would be unwillingness. I just let me see. Okay, this sweep, even better. It's swept. Perfect. That means okay. That changes scenario. That means therefore it's not unwillingness. That means that the structural disruption completed its task. The task is completed. The effect has been the cause has been effect, and therefore now the effect of that effect is now the transition here, which means that we now have a bullish sweep, which is a different scenario from the structural disruption. The structural disruption is meant to see the bullish range fail, whereas the sweep is the bullish range failing to break, and then you have the transition internally. Right? So two different models there. But his transition here, right? If this transition is to lead to this break, then you can assume that we're going to come up here. Right? And why is that important? Because if you're to come up here, then now you have the opposing scenario where what happens now after we sweep this reaction. This is what I mean, where after we reach TPs, we don't know what can happen. Because once we are here, right, two things can happen. Either we're going to skyrocket to all-time highs, if that is all-time highs, don't know, don't care. Or we are going to break the low that led into the high, which would then be the transition to the downside. So that means that there's a decision to be made here. If I'm buying here and I'm looking for this, or well, obviously you were looking for, I believe, this, right? But you're kind of selling yourself short because you're not understanding that there's also a higher time frame play here. So here, if you're then to now be able to hold or justify holding up until here, right? Then from here, either you take your full profit or you try your stop after a partial. Because either we're going to go all the way high, and even if you have like a 10% trailed of your position, this is still, decent gains, right? Whereas if you just take the full profit, that's okay as well. I'm not opposed to that. But now if you charge your stop and you take the partial, right? We can now see that if this trail stop is to be hit, then my entire scenario is invalid. And what does that mean now? That this is a sweep, right? And maybe it wasn't tradable, but that doesn't matter. But this is kind of what I'm trying to get you guys to understand. Transitions, cause and effect, and if then scenarios. That's pretty much what cause and effect is. If then, if this is to happen, then I can assume this to happen. Right. But I thought this was a really good scenario though, by the way. This one you should know. But you should also not cut yourself short on that one. But I might be looking at this at the wrong scenario, but I hope you guys get what I'm trying to say. Another one, right? Transition. We are bearish. We are bearish. What is the mechanism or what is the idea that is causing this to want to be bullish? Well, we can argue this is very important here, right? Because internal solidified points are already starting to fail, but that's from a micro sense, right? That's just the micro is necessary for the scalp, and the scalp is necessary for the minor intraday, et cetera, et cetera, et cetera. So this leading into this break means that we have high, low, retracement, potential SD. SD is not broken, and then we have a full transition. Does this now means that we potentially have a POI, right? Buy to sell, sell to buys. If let's I want you guys to test this out. If you have a micro or an internal SD that causes a shift of trend, check and see how many times that is a buy to sell, sell to buy zone, and how many times it perfectly comes back to tap it and then actually goes in the opposite direction. I want you guys to test that out this week. Or test it out over the weekend. Internal SD or internal failed move. Let that lead into the break. And now see how many times it comes back to that. Because you see it came back perfectly here. All right. It's a cool observation I want you guys to note. It's very neat actually, because these SDs are actually like POIs. Like let's say they're like traditional SCs, like on a higher time frame. So if we're looking at this, like you see here on the M1, you can see it's like a potential SD based on this. You can see how it looks like now on the M3. You can see how it looks like a POI. So I'm sure on the M5, this is probably like a very clean POI. Very good here as well. You see, so you're catching the transition again. Why is this important? Because we're sweeping here, so we have technically a dual sweep, internal transition, aiming for here. But I would take a major partial here, and then I would see if we can reach up here. Because if this high is to be broken based on your transition, then we are now seeing that this potential structural range is intact, and we're now seeing the pullback fully be invalidated, right? And then from there, let's see what happens, right? Because this is like the keys to scaling. There's only a couple of things you could do to scale. Either you adjust your models to a quote unquote like A plus A, some type of classification hierarchy, right? But you guys know that I don't like that, and I don't like to speak like with that because there's just so much that is assumed. Like if somebody's telling you that something is an A plus setup, and it's not quantified, you can't really put it on an indicator, then I just think there's too much that's assumed. Not saying that it's wrong, but it's just too much that's assumed. So therefore, if too much is assumed, then one A plus setup could be better than the other A plus setup. But if they're different, then how are they both A plus setups, right? Just a contradiction, right? That I don't like to see. So the only ways to scale is if you classify a hierarchy for your scenarios, and then you add bigger risk to the better scenarios, right? Or you can just have a general classification of, okay, this is what I consider a good setup, so I consider a bad setup. These good setups, now that I see these good setups and I can find these good setups, then maybe you can up your risk. Like the really cool sweet number that I've always liked is like 3%. 3 to 4%, nothing above 4%, 5%, I think is a bit pushing it. Just like as a comfortable scaling method. And then obviously there's like the prop firm route. And then the other potential method is to start to trail, just start trailing like 10% of your 10% of the position. Why? Because if you can start to understand these types of moves where you have an external transition and an internal transition, right? What makes this transition different from this one? Right? It's a rhetorical question, right? And if you can start to study this and start to analyze this as, let's say, this type of transition is good for meeting here, but this type of transition is actually better for seeing this overall go higher, right? Determine why. First, determine that is as so. Then you determine why that is as so. And then once you determine why that is as so, then just start trailing a bit. Like leave it running like the 5-10%, whatever. Fuck it. Who cares? It's 10% of the position. Like, because now if you hold these longer term positions and you're opening yourself up to the possibility of seeing your trades hold longer, then it'll give you more conviction, more confidence over time. All right. Does that make sense? Does that make sense? Yes or no? Because all I want to do is break your beliefs, right, guys? I can't really teach you guys anything. All I can do is potentially challenge a belief, um, show how I see it, and then you do what you want with it, right? All I can do is provide bits of clarity. I can't really change your mind on things. Only you can do that. But you can do that to yourself by giving yourself permission to hold longer. You give yourself permission to hold longer, then now you can see that you can fucking do it. What exactly it is that you can do? Well, one, not just that you can hold a position, right? That's level one. But what does that holding that position mean? How can you replicate that? How can you do that again? That's giving yourself permission to expand your knowledge and expand your abilities, right? And that's like across the board, right? That's like beyond trading as well. Um, okay. Okay. Yeah, this one. So we are bearish. And we're technically aiming for this. Excuse me. Okay. So when I'm reading this from a bias POV, if I'm seeing this to be bearish, obviously it's a pullback. This is still bearish, right? Then I'm also looking at if this is to then be a structural disruption to cause me to go higher, then I now have to understand that I have this overall swing bearish, this internal swing bearish, but then the pullback of this is now technically bullish. So if that's technically bullish, then let's see. Right, when we're looking at the failed scenario, okay, you didn't put the okay, no, you didn't put the M15. No. Okay, anyways, I'll just use this. The if this is internally bullish, then I now have to understand what is recent what is the recent scenario doing on a time frame to compare it to the external. What do I mean by that? This is how you find a bias. This is the easiest way to find a bias. What is the immediate move doing, right? Compared to all the other levels of structure you can annotate or you can know. That is how you find a bias because this immediate note is what trickles the effect that's going to lead to this range continuing or this range continuing or this range continuing. That's the only, that's the, to me, that's the only practical way to actually find a bias because up until here, this data is just reference, but this is actionable reference. So actionable reference would be what is happening here? What if then scenarios can I create based on this? And then judge the if then scenarios to see whether if we are to have this bullish scenario in my favor, let's say you find an execution, then from there, if I'm to break this high, what does that mean? If I'm to break this low, what does that mean? Even if I take a loss, I could take the inverse scenario, and that's okay because we trade failed scenarios, right? And then that's how you build your relationships. But coming into here, the execution here is correct. I'm not opposed to the execution, right? Which is what we talked about here. But now the next step to the execution is the management. And it's like, okay, what do you determine as the invalidation to get out of a trade early, right? Could it be trailing your stops? Could it be inverse LG? Could it be inverse scenario, et cetera, et cetera? You guys know that I like to see that usually if I'm trading a scenario, I like to see the external leg be taken out and then I start to trail my stop. Um, why? Because then if the external is broken, then that means that my internal transition was valid. And therefore, if we are to then have that fail, then that's a failure of my scenario. That's why I would try my stop in that scenario. So here, if you're trading this, then obviously, like we don't really have structure to reference to, which is not good. But therefore, the internal price action has to then say something. What is the internal price action saying here? Like we have a low into a high. Then we have a bunch of no man's land. And exiting from no man's land is also fine. Because realistically, the reason why we trade these failures is because we want to trade these failures during times when we see volatility in the market. Why? Because we want to catch the volatility that's present for the day if you're a scalper intraday, or you want to catch a transition from a grand scheme if you're looking at swing trading, right? So no man's land is also a very good reason to want to exit a trade. And personally, I never really get no man's land in my scenarios. That's why I don't really note that as a rule. because I don't really see that happen. So that could like that could be just an effect of how I trade my stuff, right? That could be an effect. Like I don't see no man's land because maybe by default, based on what I'm looking at and what I trade, then I'm looking at scenarios during times when volatility makes sense or when volatility is implied, right? But this is just like what I'm thinking. It's an assumption, right? But I don't really see no man's land in my scenarios. Um, at least not enough for me to know. So like no man's land itself could be another invalidation for me. If I start to see this type of stuff, like I will probably like to not be a part of it. Why? Because the no man's land represents a range. So therefore, if it represents a range, that just means that there's no volume in play. So if there's no volume in play, then my transition may not be ideal, right? So how to play this, right? You could obviously have your range, and then even if you break out through the range, you can even start to try your stop. Or if you start to see this as a sweep, then you could take a partial and then try your stop, or you could just close after you start to see maybe an engulfing here. Like there's many ways to go about it. It's just all personal preference. But the same way that you approach looking for an entry should be also the same way that you approach exiting an entry. If I'm looking at a failed scenario to enter, then look at the inverse scenario as a reason to close, right? Uh, See, because here, this scenario now, your stop loss or the stop, or let's just say your stop loss would have been obviously this is the scenario, right? That POI, once this is broken, then we now have this low into this high. So once that is broken, right, then this is now potentially a scenario that we have an internal sweep that aligns with the external. So if we then, let's say, have another transition here, or if we have something else here, then that would be my reason to go lower. And then this would be my TP1. And understanding this type of mindset will actually allow you to trade both sides, but it would also make these losses like meaningless. Like in terms of an emotional state, like most of these losses don't matter, guys. Like they're part of the game. They're cost of doing business. Like whatever. You lose, boo. Like what are you gonna do about that? Okay, what's the only way to do something about a loss? It's like if then scenarios. If my stop is to be hit, then maybe this could be another scenario. And you don't have to trade it, but you have to observe it, note it, and then a lesson for the next time, you know? Anyways, next one. Okay. FX Pro. I've heard of this broker before. Anyways, I would say to your excuse me. um, I like the scenario. I really like the scenario. I just think your chart's a bit messy. Um, I don't know if it's. I think maybe it's just like your labels. Because let me see. You have New York trap. That's interesting. What do you call a new? What do you consider a New York trap if you're on the call? That's interesting. Maybe on the call, maybe you're not. I'm pretty sure you are. But anyways, if the answer's cool, if not, I'm interested. That's pretty cool. New York trap. That's like what the first hour or the hour before the where price is most volatile, based on what? Oh, is it like the first hour of New York because you trade indices, so therefore the first hour before open? Ah, interesting, interesting theory. Interesting. I like that. I like those types of ideas. Even if they're intuition based, if you can validate it with data, that would be really cool. Because those intuition things are actually priceless if you're able to quantify it. Anyways, sweep, yes, no threshold breach, internal transition. This is the definition of a traditional sweep. Sweep, internal transition, external assumption, internal alignment, and then from there, buy to sell, perfect. But you are selling yourself short here, bro. You are selling yourself short because think about it. Like I just said earlier, right? If we're looking at the sweep, the goal of the sweep is here, right? And if the goal of the sweep is there and your execution is here, then therefore, if you were to reach TP1, which is here, then you now assume the final leg up to have failed. So now realistically, even if you don't move your stop and you take maybe a little bit of a partial, or even if you hold, then you're now way more confirmed. You now have a way higher probability of this going lower because the final low that led into a high broke. So therefore, if that broke, and you're already in the entry, then you caught the move before it is like just overall presented. Because like I said, it's a trickle effect. The micro needs to fail so that you get a scalp scenario, and then the scalps has to then do XYZ so that the minor intraday can align, and then therefore for the major intraday to align. Does that make sense? So if you already cut the entry, and then the minor intraday is now presenting itself to be valid from the external POV, then you now have a reason to hold here. And then you take it a level beyond that, right? You take a level beyond that if you want to go even higher. Like let's say this is on a overall bearish trend, right? Then you now know that if your major intraday is to be taken, then you're now aligned with the overall external. So then if you're aligned with the over external, then you have an even bigger target. That's the key to like high risk reward. The problem is that obviously like this transition here alone is like what 20, 30 candles on an M5, then assume that to be a so as well on the higher time frame. So in order to have this type of scenario, by default, it has to be much more rare for all the levels to align. Right. So yeah, you're selling yourself short here. You should hold to there at least. And then depending on what reaction is here, you could even hold even longer, but then you would need more context. All right, let's see if there's any more in the Discord. I think there's definitely more. Ah, you did have more. Cool. Let's see. Let's see. Yeah, I like this one too. So something I don't like to see is stuff like this, right? We have to think about why stuff like this occurs while you're in your trade, because then the trailing method, it'll be swayed, right? And the only reason why this happens is because there is no clear bullish range. That's the only reason why that happens. Why? Because if you have, let's say, equal highs, or you have a minor sweep or relative equal highs, then therefore you have a somewhat unwillingness to go lower or higher. Sorry. So if you have unwillingness to go higher, then clearly there's a bearish structure. So therefore, if there's bearish structure, there's a possibility that this can react. But just because you have a reaction doesn't mean you get a follow through, obviously, right? But that's just something to know. Although you do have a potential sweep equal highs, that's what's giving the catalyst for this reaction to occur. But just because the reaction occurs, that's just more so potentially another entry if the overall is still aligned to be in your favorite direction. All right. So to avoid stuff like this, right? This is why I go back and forth with like the whole trailing stop thing or with the management side of stuff. Like I used to really like to trail my stop based on LG or based on a type of model because then that implies to me that that's the beginning of another move. But I'm also assuming that this will not fail, right? Because this is technically a failure. So technically we are bearish right here, but then it converts back to bullish here. So like I'm not considering that by doing my traditional trailing stop rule. So now I've just been like doing like partials and then just holding it above like commission pricing. That's kind of like been my new approach. Um, but yeah, this is neat though. Like if you can see, this is cool because you can see here, right? This is the high that led into the low. Notice that that's where price came back to. This is what trending markets mean, like to me. Sell to buy, mitigation, and then that, and then sell to buy, right? That is what causes a trend. Pretty neat. So here you should note this as well. You should note that. That's important, right? A low, like it's all about distance, right? Look at the distance here. Then look at the distance here. Sweep. If you reach the threshold, right? If there's a threshold, that's in the sweep book. And then based on that, that transition makes sense. And then if you get even another transition here, oh man, that's golden. That's how you get these like 1 to 10s in these scenarios, because you're combining the overall external, you're combining the assumption of the sweep, then you're having an internal potential transition, but then you're validating the transition with the actual what the actual transition inside the POI. So you're dealing with like 1, 2, 3, 4 levels of structure. And if you're doing 4 levels of structure, you catch the transition. This is now another one of those scenarios where you're catching an overall transition and an internal transition. So if that's the case, then if this is to break after this reaction, then you can hold longer. And then if this is to break based on this reaction, this is when your chart stop. But if this is to that break, then you have monster trade. Okay, you're in this now. I don't like this because we're stuck in the range. Yeah, man, no worries, no worries. Appreciate you hopping on. Um, I don't like this one at all. No, I don't like this one at all. The execution makes sense, sure, but this is like could be considered a sweep, and I could consider this to be going lower. So then the fact that we have this POI and then this fails, then maybe I could justify, but then maybe we're also like at the premium. So I don't know. How's that doing now? Like I don't really like this type of scenario. It feels like a guess. Okay, see, so here we break here. So now this would be kind of where I would want to see now maybe something fail. And then now we can go higher. This would be TP1. And then if that is to break, then I can hold higher. But I do like this sweep here. That I like that. Obviously, this is open momentum. But it could just be a tendency from like from these indices, right? Like, is there divergence? No. Okay, this one's cleaner. I like this one more. I don't know, man. The urge to like want to trade these is like going up every single day. How would you guys compare like the PA here to like FX? I mean, I see the scenario. I don't disagree. I just don't think it's my preferred type of scenario. Would you consider this type of entry aggressive? Yes, I would consider it aggressive. I would. Just because um aggressive and conservative is like it's a very broad word, right? So like if you wanted to bring it down to like mechanical terms, an aggressive entry, I would consider it to be an aggressive entry is an entry that has many potentials of failure. There's many reasons why this could fail. That's why I would consider it to be aggressive. And whereas if it's conservative, then a lot more is aligned. Therefore, there are less reasons for it to fail. That does not mean it cannot fail. I'm just saying that the amount of reasons are less. Right. So even here, like let's say the engulfing, that is even much more conservative to me than this. Because then, for example, this is obviously hindsight now, right? But if this is a POI and then we have the internal transition and then we have the engulfing, right? Then I can zoom into M1 and then this would be a transition. So then this entry could be what's validating the POI, which is what's validating the sweep. Does that make sense? So the trickling effect. I really like saying that these days, guys. I've kind of like deciphered how to explain that on my own. Because yeah, look, so like this is your sweep, equal lows swept, right? Makes sense, makes total sense. I agree. I like that. But it's not just about the equal lows being swept. Equal lows, high momentum. Does it matter if it's because it's the open of the market? Does not matter. Momentum is momentum. Volume is volume. Momentum is momentum. So momentum plus equal highs is enough on this time frame for me to give me a bias. Yes. But now the reaction after that, okay, we then have an internal sweep, we have a POI. But like at the time, right, if this is a sweep and this is a POI, I still think this is too soon to buy. I still think this is too soon to buy. Why? Because we have this going up, right? And then we have some type of range and we failed to go higher. So therefore, there's some type of selling control here. There's some type of selling control there. So therefore, this sweep, right, and then a potential LGC, that is enough for me to now consider this to be unwillingness, validates the POI, validates the equal lows, right? And then this should make a lot more sense. Not to mention it's way better risk to reward. So more conviction, more risk to reward. Like what more could you want, you know? More level alignment too. But yeah, I think that's all that you guys have for me today. So yeah, just leave it at this. I hope I broke some beliefs today. That's really like the point of these calls. I just want to break a belief, because if I can break your belief and then let's say you challenge that and it breaks my belief, then we both win, right? But more than anything too, it's like I like to hear things that people say, and I like to reason with it without overthinking it. For example, like I just want to see contradictions, and can those contradictions be solved? Like let's just say, for example, I always hear this. Um it's like making it simple, and maybe I used to also say this, but you want to be like simple with your trading, and like you want to obviously find simple processes to want. Maybe I don't know if I'm getting that quote right, but hopefully you guys know what I'm talking about. But you get like like you want, people ideally want you to trade simpler scenarios, because simpler is better for whatever reason. But like at the same time, they're also telling you not to pattern trade. So like to simplify the approach without adding complexity first is a bit contradictory to me. Making it simple to you, yes, exactly. Making it simple to you. Making it simple does not mean simplifying. How you get to the simple is also important. For example, I've simplified my structure by overcomplicating the fuck out of it. What do I mean by that? Right? I used to want to say that we would only have one, maybe one level, two level, and then obviously maybe the internal. No, but then we're also not considering another potential level, and then we're also not considering internal levels. So this is about 5 levels of structure. But now, if I cannot understand that there's 5 levels of structure at least present, then I cannot validate which ones are important. So if I overcomplicate, then I simplify. I overcomplicate to understand the bigger picture, but then I simplify the overcomplication to make it actionable, right? So yes, you want to be simple, but I think it's also very good to overcomplicate everything, find every possible scenario, and then simplify those, right? Daily cycles, right? We talked about this before. Like, I don't even know the popular daily cycles, but all I know is that 3 things can happen in a market. You can trend, you can consolidate, or you can manipulate, right? There's not, I can't really think of another one. Therefore, right, if we're then now narrowing trading, let's simplify the sessions to like New York, London, Asia, the 3 major, right? Therefore, we now have New York, Asia, and London. So we have 2 dimensions. So therefore, there can be 9 combinations. 3 squared. There can be 9 combinations. So if I can find out what those combinations are and then test how many of them occur, then I can start to develop biases based on the pattern of the sequence. Let's just say New York is trending, and then, oh, actually, no, I'm sorry. Let's say Asia is consolidating, London is manipulating, then New York could trend. Okay, that would be step one. But then you have to add more complication to it, which, like, okay, how would you then determine the bias? And, add those complications, find these processes, understand that they are there, and then create if then scenarios. But I would need to complicate it first before I can simplify it. You cannot simplify what you don't know, right? If you assume too much, then you lead yourself to having losses that you consider to be part of your model, and you can't explain them, right? Not saying that you have to rationalize everything, But if you kind of explain your losses, even though you consider it to be a high conviction trade based on your data, then there's a discrepancy. That's why a lot of people you see with their back tests being really good, but their live trading being shit. Why? Because there's a lot that's assumed. There's a lot that you're not accounting for. What you're not accounting for, who the fuck knows? But you just have to be aware of that first to then pursue that. Get everything, then simplify. Does that make sense? And I'll probably leave it at that for today, guys. And it's a bit of a mind fuck at first, guys. Don't worry about it. Like it's a bit of a mind fuck. But if you can think this way, then I just think it's a lot easier to problem solve. At least for me in this method, because this is the method that I'm using to automate my stuff. Um, because if something is truly mechanical, then it can be automated. But obviously, like I cannot trade or I cannot automate a trending market without first understanding all the levels of structure. Right. That's why I'm trying to also code like solidify points and stuff. Like, right. It's why I'm trying to code this stuff. Like, so if I can code this, then I can code everything else. Right. Process though, it's a big process. But yeah, guys, I will go ahead and leave it at that. Unless you guys have any last questions. Yeah, man, no worries. I'll go ahead and leave it there.